In today's video, I'm going to be having a look at China and Hong Kong unemployment. We're also going to have a look at what some Australian farmers are really thinking on the ground about the tensions that are rising between Australia and China. We're going to be having a look at some pessimistic billionaires. I've put together a list for you to have a look at there. And I'm also going to be covering what Fed Powell has said last night and his expectations for the economy. In addition to that, we're also going to be having a look at what OPEC believes their second quarter is going to look like. Hello and welcome to another acysecurities market update. My name is Alistair Schultz and I'm going to be your host through today's trading journey. As always, I give a bit of a COVID-19 update. Today, I am going to talk you through the numbers. We have more than 4.3 million cases worldwide so far. We have nearly 300,000 deaths and the number of recovered has risen above 1.5 million. Good numbers to see, not so much on the death side or the cases worldwide, but at least it's getting somewhere at this point, and obviously lockdowns are going to be easing. There is still a major risk, especially when we look at from what central banks believe and obviously government action, seeing that there is likely to be a second wave of infection. So those risks do still stand, and now that we are starting to exit lockdown in some countries, that risk is probably going to be much higher. Now, having a look at what's going on with China and Hong Kong. Their unemployment, the data hasn't been all that add up right this point, but what we are seeing is that there is approximately 130 million people who have likely either been stood down or lost their jobs, or potentially even been put on the fence as to a small substantial wage to keep them afloat whilst this pandemic goes on. Now, it is interesting because if we think about this situation with Hong Kong in the past sort of 2 years, we know that there's been a lot of unrest. There has been riots occurring. We've had a lot of political sized sort of things going on, and that has led to a contraction of about 1.2%. And this includes stopping expats and tourists from sort of going there, which is naturally being in Hong Kong's favor because they are so close to China and they have a lot of people traveling back and forth between the two places. So they are expecting now to see even further reductions, likely somewhere in the realm of about 7% on a year-over-year outlook. There are a number of other factors here that we need to sort of consider. It is the worst forecasted jobs market for 2 decades. Last time we saw this sort of stuff was well and truly before the GFC. So hopefully we do see some good news coming out of there and that they are going to be able to get the economy kick-started again. But the concern right now, especially from China's perspective, is that they haven't really put enough stimulus into the economy, but if they go too far with it, then they're going to run into other problems as well. Naturally, at the moment, what they are reporting is that they're seeing more people getting car loans and simple things like that, which means that there is probably a little bit of a good kickstart to consumers on the ground. However, it seems to be supply driven. Everything on the supply side, because they've got little bits of bulk stockpiles before the world shut down, things are probably cheap. But if we keep going, eventually the demand side might take over here and it may not end up being a good scenario for them with inflation. So we are going to have to keep an eye on what's going on there, especially if we're going to be doing some trades or any markets that might be inadvertently affected by what happens in China. Now, the next thing to sort of have a look at today is on Australian farmers. Now, we know that there's been some sort of tensions rising between Australia and China, and that those tensions are starting to bubble over, and there is talks of really high tariffs. There have been bans on some producers and farming sort of agriculture sort of supplies, and now there is question as to whether the wine and alcohol industry will also be affected by this. Right now, we haven't had a tariff confirmed, but the talk is of it being about 80%, which is really, really big. It would make it almost unrealistic to even bother trying to ship things there. So now the farmers on the ground are also obviously starting to suffer on their wages. They are obviously starting to not have anywhere near as much output, or at least some of their income coming from it. So there is concern around there. We will have to keep an eye on these tensions. I feel that they are likely going to rise further, especially when we look at the actions that are going on around the globe, not just within Australia, and some of that argument for wanting to get an independent investigation done. Now, moving on from there, we do have a number of billionaires and investors, hedge fund managers, a variety of which are all quite pessimistic towards the economy in general, but also that are seeing the stock market as being overvalued. Their concern is that whilst it has had this immediate recovery, that it is overinflated in its sense of being. When you look at everything else on the ground around the world, there's really not much reason beyond stimulus that suggests why a stock market might going up. So all of them, or all of the guys on this list, which have the likes of Ray Dalio, Warren Buffett, we have Sam Zell, and we have a variety of others, including Stan Drumica, and now we've got David Tepper added to this list, and the list is getting quite big. Really, in the reality of things, all these guys are being quite conservative now, where they would usually be buying quite heavily. So what is that going to give us in terms of information about what we might do with our own investments? Well, naturally, in my book, I'm looking at a market that's going to likely going to continue to go down short, and that there will likely be at least another run down before we sort of see a good outcome. Likely it'll be after our second quarter figures, but you can never put a date and a time on these sort of things, and in fact you can never really say what's actually going to happen. You can only react to the news you have available at the time. So let's keep an eye on what happens here. I'm going to be continuously following most of these guys on this list to see what they are doing, and hopefully we do see some optimism return from them, or that they start looking at particular industries where they might see some value. But until then, let's keep an eye on it. Now, last night, Federal Chair Jerome Powell did have a bit of a talk. He had a speech that was scheduled at about 1:30 in the morning, I believe, Australian Eastern Standard Time. Now, what he has said is interesting. Now, he has talked about negative rates in the past. Mostly it's been a reporter who's asked him a question about it to see where he's thinking, and every single time he's rejected it. Last night was no different. But he has made some interesting comments. He has said that he is uncertain about the outlook, and the Fed isn't exactly 100% sure on where things are going to go. He knows that there is a serious amount of risk towards the economy, for the US side of things, and for the rest of the world. And so he sees that there is a lot of headwind for getting the economy back on track at this point in time. He is personally in the belief that there is going to be mass bankruptcies and there is going to be mass unemployment. And he feels that the 15% target is going, like the 15% unemployment rate that they have now, is certainly going to increase beyond that well and truly. So we've already heard Steve Mnuchin say that he thinks the real unemployment rate right about now is somewhere in the 20 to 25% vicinity, which would put it on par with the Great Depression. Now, regardless of that factor, when we look at how far the stock market actually fell at the first signs of COVID-19, it was the biggest move in history. We start pairing all of these things together when we look at the idea from a stimulus side of things, we have the pandemic side of things, we have the economic side of things, and we have the responses that we're seeing from people on the ground. Most of it isn't really in a good situation. So we are going to have to be prevalent and keep an eye on what happens. Naturally, whatever the Fed says and what comes from Jerome Powell tends to impact the economy a lot. So if you are trading US pairs or pretty much any currency on the planet, keep an eye on what's happening there. It's important to do so because it can be an unscheduled announcement, just like we've seen when it's been unexpected rate cuts or a variety of things. If you aren't aware of them or keeping in tune with what's going on, then you could get caught out. So keep an eye on what's happening there. Now, the next piece of information to give you is really on OPEC. I did cover this a little bit yesterday, saying that other nations were looking at a cut, but what they've really done today has been an expectation on where they're seeing the next quarter to go. Therefore, OPEC are forecasting that the next quarter is going to be worse. They think there's going to be, like, they're only going to have to make approximately 15% of the supply. So they've cut even further. Again, obviously on top of what the actual OPEC cut agreement was. So hopefully we do see some prices coming back up on oil, but their expectations are that demand will still not come up and that they are going to have to further cut on the supply side. They've got their next meeting scheduled for June 9 and 10. So be aware on that day, especially if you're trading oil. We might see some interesting action, and hopefully we do get some more data along the way. Perhaps we can get some more clarification from Russia on what they're thinking, and naturally we want to see what the other OPEC members are sort of thinking as well. Even though they might not be as large, the combined effect of all of them working together might be a good take to see what happens. So I do think we are going to remain with the sort of levels of price that we are seeing about now, but let's keep an eye and hope for the best. Now, that's really all I've got to cover for you for today, but in terms of news that we've got coming out, we have Australian unemployment news, which is likely going to be big. The last time we had unemployment data, they actually cut it off right before the lockdowns took full effect. So now we're expecting to see a hell of a lot more action in terms of what the effect has been on the economy. Now, the current forecast from what I can see is about 8.3% for the unemployment rate and more than 525,000 jobs down the tube. But I feel that these figures might be a little bit bigger. However, the thing that could be counteractive to that is that they've had such a big stimulus package go towards this JobKeeper idea. So the idea being that the government will pay businesses money to keep their staff on. So in my head, it just looks like the government has really employed like 6 million employees. So we'll have to see what sort of happens here. I am very curious to know. It comes out at 12:30 today, so Australian Eastern Standard Time. So if you are going to be trading it, keep a good close eye on it. It's important. I think it will really determine how effective the stimulus has been for Australia and whether or not the lockdowns have actually starved anything off and how much they've actually starved when it comes to the idea of businesses. Naturally, we won't see absolutely everything in these data figures, but hopefully we will be able to get a bit more of a gauge on what's really happening in Australia. So other than that, we do have some announcements coming from the Bank of England, and we also have it from the Bank of Canada. Both the governors there are going to be speaking at different times tonight. So if you are on those pound pairs or you're on the CAD, then keep an eye on what's happening with them and what they say. I imagine their statements are going to be very similar to what Jerome Powell has said, and there's going to be really more of a dovish outlook from them. But that's all I have for you today. If you have any questions about some of the stuff I've covered, perhaps it's some of the news stuff, or you want to get in contact with me about something else, feel free to shoot me an email at talktoal@acy.com. And of course, don't forget to like and subscribe to the video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.